I did. All right, all right. TGIF. Thank you for tuning in today for the Sacramento Real Estate Show, where we share stats, information regarding the local Sacramento real estate market in an entertaining way. So I got my guy, Mr. Lynn Pro himself, Ben Johnston, with me. How you doing, Ben?
I'm doing well. Good morning. Thanks again for having me.
Absolutely, man. It's going to be exciting today. We're entering a new month, so we have some new information for you guys. It's
Yeah.
been a crazy summer. It still feels like summer. I mean, it got as high as 115 yesterday. Wild. Were you outside in that weather?
No, I was locked down inside in the air
Oh, man.
conditioning. Yeah, it's been too hot. And then with the smoke and the fires and stuff, it's crazy.
Yeah, man, it's real crazy. But you know what? Some good stuff is taking place this week. I don't know if you noticed or not, but it was Thursday yesterday, and it's this certain sport that came on last night. Somebody got a win, somebody got a loss. Football season has started, ladies and gentlemen.
Yes, it has, man.
It's
I
official. We got a undefeated team, and we have
Yeah,
a team that hasn't won yet.
there we go. There we go. Yeah, it's football weekend.
Yeah, man. So we got that coming up. You got hopefully the weather will start cooling down here. I actually heard we're supposed to be having a hurricane somewhere on the coast. I don't know if you heard about that.
Wow, no, I didn't. I know that hopefully we'll be back down into the 80s here in Sacramento next week, but no hurricane talk.
Yeah, man, which is still wild because I mean we're literally supposed to be entering the fall season.
Yeah.
So I don't know if means we're gonna have a dry winter. We need water, so I'm hoping that that's not the case, man. So all right, man. Let's get into it, man. Let's talk some real estate, man. Like I said, it's a new month, so we got some exciting news about down payment assistance programs that are out. I know one of the major ones that I heard about, and I don't know, Ben, maybe you could touch on this,
Mhm.
where it comes to minority buyers and something that Bank of America is doing, where they're supposed to be releasing all these funds. I don't know. It sounds like a great marketing ploy, um, but
Yeah.
we'll see. Did you hear about that at all?
Yeah, I did see. I mean, it's kind of gone viral in the headlines and things like
Yeah.
this. I don't know too much about the program, but it has been pretty big in the news. That's a Bank of America direct program for people that would
Oh,
have
okay.
to apply through Bank of America specifically. But yeah, we'll see. Hopefully, it's able to help a lot of people buy houses.
Yeah, man. I that was my question for you because I know you guys are. Help me understand. Now, I know that there's some brokers that lend their own money, and there's some brokers that go out and broker the loan out to other institutions. Tell me a little bit
Yeah.
about Movement Mortgage.
Yeah, so Movement Mortgage, we are our own entity. So we are a mortgage bank. We're not a depository to where you can open a checking account or anything like that. So we focus just on mortgages. A mortgage broker is somebody that takes your application and then they send it to a different bank to get done. Well, we retain control of that whole process. So from your application all the way to funding the loan and getting you your keys, Movement Mortgage, we handle that process here in our office. So we're lending our own money and we have our own guidelines and everything that we lend on. And then we service the loan as well. So
Okay.
you know, it's not outsourced to a third party servicing company that you can't get a hold of and stuff like that. So yeah, we keep the whole process in house. And because we're a mortgage company specifically, that's all we do. a lot of times we can offer better service than the big banks, the Wells Fargo, the Chase, things like that. So we do have access to all the down payment assistance programs through Cal HFA and GSFA and things like that. But we do the loan application, funding, everything here in house at Movement.
Thank you, man, for
Yeah.
explaining that. I get that question all the time from my buyers, where
Mhm.
they sometimes tend to think banks can um, give them a better deal. Um,
Mhm.
but I always tell them, get a second opinion. There's nothing wrong with going to your local bank if you've been with them for a long time and
Yeah.
they did some other loans. But always get a second opinion, because now, does that give you flexibility?
Yeah, absolutely. I mean, we offer some of the best rates out there. A lot of times the banks aren't super competitive when it comes to mortgages. Some are, some aren't. So it is good to get an opinion. When I'm talking with a new client, I pull up the average of the whole nation, and I can actually sort those by credit scores to show them that they are getting something that's either below average or at market rate. So um, especially when it comes to like VA loans, FHA loans. A lot of the bigger banks aren't great at those programs. And
Hmm.
so we can offer a lot lower rates in a lot of cases on those.
Oh man, that's great, man. Thank you for letting the listeners know.
Yeah. And then
And
most of the down payment assistance programs, those rates are fixed by, Golden State Finance Authority or Cal HFA, whoever's providing that down payment assistance program. You're going to get the same rate no matter where you go because those are fixed.
Okay, all right. Thank you,
Yep.
man. Hey, a knowledgeable pro here, man. Stand on that lines. I have another quick question for you that I get a lot from my buyers.
Mhm.
Um, and this is kind of what keeps them with the banks oftentimes, because they're told that if you submit a loan application, uh, and you get quoted a rate that you don't like, if you leave, you'll take a ding on your, or if you go to shop, you'll take a ding on your credit report.
Hmm.
Kind of clear that information up for us.
Yeah, that's a great question. So, um, the credit bureaus, Experian, TransUnion, Equifax, they can't penalize you for shopping for credit. So, like you said, it's important to get, maybe a couple different opinions. And so, if you apply somewhere with mortgage, we all pull the same credit report, and it's different than the score that you're going to see on Credit Karma or your credit card company. And
Hmm.
so, because it's the same report, if you apply at a bank and then apply with us within a 45-day window, we're going to pull the exact same information. And so, it's not going to ding your credit, it's not going to hurt your score. By doing the initial pull, it could affect you a couple points, just showing that there's a new inquiry. But we're going to pull the exact same score as Chase Bank or whoever you pulled it with prior, as long as you do it within that 45-day window.
Okay.
So it,
Now,
it doesn't hurt you to shop around.
perfect. Thank you for that clarification, because
Yeah.
oftentimes buyers are, they're scared. They're like, well, hey, I just talked to this one guy or gal, and, she already ran my credit. I don't want my score to go down. And so thank you for
Yeah.
clearing that up.
Yeah,
On the
absolutely.
lines of,
And
go
it's
ahead.
different. Like if you're opening a bunch of credit cards in a short period of time, you're pulling with different companies actually opening accounts. That will hurt your credit. So
Got it.
we kind of know with a mortgage, you're pulling the score to find out what you qualify for, but really you're going to only open one mortgage loan, right? Because you can't open multiples at the same time. The lenders will catch that. So, yeah, opening a bunch of credit cards all at once that will hurt your score, but pulling a few credit reports for a mortgage will not.
Great, great. Thanks, man. Like I said, and let's stay on the conversation about credit, because oftentimes we do get quoted the Credit Karma score.
Mhm.
I know you see a
Yeah,
lot of that, especially. Um, and they quote their highest score. You ask somebody what their credit score is, they quote one score. And we know as
yeah,
professionals that you have three scores that
yep.
are popularly used by financial institutions. Um, kind of explain how you look at credit when you're when someone's applying for a loan for a mortgage.
Yeah, and that's a good point because Credit Karma, and I mentioned like the other banks. So if you have a credit card with Wells Fargo, if you have a credit card with Capital One, there's 26 different credit algorithms out there, and there's only one for mortgage. So Credit Karma to Wells Fargo to Capital One, those are all going to be different, and they're not going to necessarily be the credit score that we use to qualify you for a mortgage. Um, we do pull credit scores with all three bureaus, which is TransUnion, Equifax, and Experian, and we use the middle one. So if you have a 600, a 660, and a 700, we're going to use the 660 to qualify you for the loan. So we do kind of a conservative average, um, and talking about credit scores, different programs have different requirements. We actually helped a client a couple months ago. They ended up doing 10% down, but their credit score was 560.
Wow.
10% down, you can do a VA or an FHA loan. So I actually just put a quick video on my social media, on my Instagram account at LendPro, talking about some of the myths around mortgages, right? A lot of
Right.
people still think you need 20% down, whereas the average home buyer puts in 3 to 5% down for a first time home buyer. And then talking about credit score too. And one thing that we do as part of our mortgage consultation is if somebody comes in and they apply, we'll give them the options that they qualify for. If the score is too low for the option they want, we actually give them a progress plan and simple actionable items that they can actually do to get that score up. So yeah, super helpful to find out where you're at.
Yeah, man, and that's why I always say you start with the lender first. You know,
Hmm.
I'll help you direct you to the professional to use.
Yep.
We'll get you over there. They'll hold your hand throughout the process. We don't just, I don't know if you were a kid. This is probably not a good thing saying, but my cousins, my big cousins, like they taught us how to swim by just kind of like grabbing us and throwing us in the pool and settle on
We
the
don't do
side
that
and try
to
to reach. Yeah, I don't know if I'm the only one, but that's how they taught us how to swim. Just so you know, we don't do that. We're not just going to throw you in the deep end and hope that you can doggy paddle. We're actually going to walk you through the process and hold your hand. We'll be your life vest and get you to the finish line, right, Ben?
Yeah, absolutely. We don't leave you hanging. If it's something that you're not ready for right now, we tell you. We make that decision together. Hey, this is what the payments
Right.
are. Are you comfortable with that? It makes it an easier decision. You know, um,
Especially,
especially right.
especially. Go ahead.
Yeah, yeah. We have a couple clients that have like leases that are expiring. As we know, rents are going up. So
Yeah,
if their rent's going to go up, they're looking at it and saying, well, maybe I can buy for the same amount of rent. Um, with some of the down payment assistance programs, we've seen people get in homes for what? Same as first and last month's rent deposit on an apartment or a house.
absolutely,
Yeah,
absolutely. So the money's out
so
there, man. The money's out there.
yeah,
Lenders are lending. Speaking of down payment assistance, let's go into some of that. People here, like I said, like you said, there's trending headlines right now about down payment assistance. Let's touch on the ones that we know for sure that are out there that are currently being used. Um, I know there's
yeah.
Cal Cal Haffa.
Yeah, so the Calhafa Equity Builder, that one's been in the news a lot. That's a great new program. So there's a couple programs with CalHFA or Calhafa where they basically lend you the money for the down payment and closing costs. And
Hmm.
then over time, there's different ways to get that paid back to them.
Got it.
Some of it stays on the property, and you can have it sitting there for 30 years. And then when you pay your mortgage off, you can start to pay them off. The equity builder, they'll actually give you up to 10% of the price of the home. And if you stay there in that loan for 5 years, they forgive that 10% as a grant. And
Wow.
they actually give you 20% forgiven each year up to that fifth year. So that's a great program that you don't necessarily have to repay. If you decide to move, sell the property, whatever, within the 5 years, you probably do have to pay a portion back, but a good program, and it's a pretty significant amount of money. You're
Now
talking
that
10% on a $400,000 home, that's 40 grand. So definitely helps some people get in there. And then also, some
well,
house,
before you leave that one, I
yeah.
just kind of want to go into some questions that I often get when we talk about down payment assistance programs.
Mhm.
Um, I know we specifies it, well, oftentimes people are looking for single family residences.
Mhm.
Um, can that work with condos as well?
Yeah. Yeah, you can use some of the programs with condos. The equity builder, the 10%, you can do that. Um, One thing about condominiums is like on a normal conforming loan for a single family house, you can do 3% down. Some of the programs require you to put 5% down, but if you're using down payment assistance, we have programs that cover that 5% and then some for the closing costs. So yeah, you could use it on a duplex, you could use it on a townhome, a condominium. There are several properties you can use it on.
Fourplex?
Yeah, you can do up to a four unit.
Yeah, man. See, those are money makers. So you're borrowing, you're actually giving the money
Yep.
through the program. You can be making money uh, through the program, and you also, if you stay in the home long enough, you may not have to pay it back at all. Is that what I hear you saying?
Yeah, with that equity builder, 5 years, it's forgiven as a grant or a gift, basically.
Man, opportunities are out here. All right, you were
Yeah.
mentioning another program that down
Oh, I
payment.
was just gonna say, in the market right now, we're seeing sellers, in some cases, willing to help out with closing costs too. So, like with the down payment assistance program, combined with maybe a seller credit that you negotiate in the contract, that's your area of specialties is the negotiation and getting the offers accepted. I mean, with some of these programs, you could truly come out of pocket $0 to buy the house. Um,
Yep, yeah,
so
man. Why you mentioned that, I'm seeing a lot of. I was reading a blog, this Sacramento Appraisers blog, and I know he mentioned that concessions are up almost back to pre pandemic levels because they
yeah.
totally dropped down because inventory was low and the market was on fire. So you go to ask for some closing costs in some cases, and they look at you crazy because there's 10 other people that's willing to pay over
Yeah,
the amount that of the appraisal, and no contingencies built in. So it
yeah,
was really crazy. But right now, that's not the case. With the inventory spiking here this past summer due to rate hikes and just uncertainty in the market, it's really opened up some doors for buyers that are looking to buy right now. Um, Prices are kind of leveling off a little bit. I mean, you're
yeah,
still getting the appreciation. Sellers are catching up in some cases. In some areas, they understand like there's some things going on, so the house definitely needs to be priced right. Uh, but for buyers, man, it's so much opportunity out there. So much opportunity. Um,
yeah. There really is. There was an article that came out last week. Fannie Mae. So two of the largest companies or entities that provide mortgages and own mortgages are Fannie Mae and Freddie Mac. And Fannie Mae came out with some projections last week. They're projecting interest rates to be below 5% again at some point next year. So,
really,
yeah. So, um, one benefit I think for people right now is if you make this a priority, you can get a good opportunity to get a house, maybe some credits, maybe use down payment assistance programs. My feeling is that if and when rates do come back down next year, there's going to be another rush of buyer activity. So I
hmm
think we might kind of lean back towards having that more highly competitive market to where you're having to battle through multiple offers and during those markets, down payment assistance is sometimes less attractive to a seller. So, yeah, I think it's a good opportunity right now.
I'm glad you bring that up because I know when the pandemic first hit, um,
Mhm.
like March, the market, 50% of the market fell off in like a week, right? What I mean by that is sellers took their home off the market.
Mhm.
Uh, the buyers I was working with, we were going out and there was literally zero competition because you have people that unfortunately their job shut down, so they didn't know whether or not they were going to be coming back to work. You got
Mhm.
people who businesses shut down, so it was a lot of uncertainty for all of us. Um, but the interesting thing is the Metro List still had homes for sale. Business is still being done because we were deemed essential, right?
Yeah.
So when I was taking buyers out there, man, we were getting offers accepted, and that happened from about June when things kind of from March to the beginning of May, people weren't making. It was like crickets.
Mhm.
Right around the beginning of June, you know, we were moving out there, going looking, because we still were figuring out how do you go inside of someone's home because of all the rules that were coming out.
Yeah.
Uh,
Oh, did we lose you?
must be my Wi-Fi.
Oh, there you
Sorry
are.
about
You're
that.
back.
Yeah, the Wi-Fi was just like zoomed down on me.
Yeah. So you were
When the
saying,
world is
uh,
a stage, man, anything can happen.
yeah, that's true. Um, so yeah, you were still trying to figure out how to go into homes and with
Right,
the
right.
regulations
So
and everything, but there was a lot of buyer opportunity.
a lot of buyer opportunity during that summer. So we were able to get a lot of people in homes that just soon as earlier, like I said, in April, excuse me, in February, um, January, December, they couldn't get in, right? It slowed down uh, to almost completely no activity. But right around September, October, it just sped up, like you were saying. That was a long way to say I agree with you, man. I think the same thing. I think what happens is you get punched in the gut. People sit back and they want to see what's going to happen because they really don't know. And then once
Mhm.
you know a few people dive in the water and they're like, "Hey, it's okay. Come on in. It's all right. I don't see any sharks in here." Then everybody just starts diving in.
Yeah, yeah, that's a
And
good
that's when you
comparison.
got all that competition.
Yep. Yeah. So I think if people figure out what the numbers are, figure out what their budget is, and they make this a priority, there's um, there's good opportunities for sure. Oh, did we lose you again? Are you there?